MOH down 18.57%. This is Thursday, the 23rd of October 2025, pre market session. Intraday low in this pre market session 153.50. Yesterday lost fractionally 0.85%. Lower prices are expected to, or rather, the downtrend is expected to remain in place at least. Yeah, well, the downtrend is expected to remain in place up till the 27th. That's Monday, the 27th, up to the close of that session. Okay. Projections are currently saying 170.4. It's currently trading at 158.95. Okay, it has actually bounced to some extent. It has bounced modestly. Previous projections as of Wednesday, as of yesterday, in the pre-market session were as follows: 193.28, 218.91, 231.49, 239.26. Yeah, positions opened all the way back to, let's see, 84 hours ago, even up to 160 hours ago. They're all in under losses. They're now underwater. They've all lost money. I think buying pressure has it increased. Let's see what we have. Surely this, you can clearly see that the stock has bounced. Let's see if the pressure to buy has improved. Not really. No, no, it hasn't increased. It has actually gotten worse. So selling pressure is there. Selling pressure is there, but yeah, selling pressure is there. It's prevailing, even though some deep buying is going on right now. Yeah. So let's find out what's going on with the company on its stock.
Here's what's going on with MOH, Molina Healthcare Inc., and why the stock is down. What happened? In Q3 2025, the company reported adjusted EPS of about $1.84, which is a major miss versus analyst expectations. Revenue growth was positive, about 11% year over year, but the bottom line got hammered. The company has cut its full year 2025 EPS guidance to approximately $14 per share, down significantly from prior guidance. Why this is bad news? The big issue: soaring medical costs relative to premiums. The consolidated medical care ratio, or MCR, rose to 92.6% in Q3 versus about 89.2% last year in that segment. Especially problematic is the marketplace segment, which is the individual ACA exchange plans. Its MCR shot up to about 95.6% versus about 73% the prior year in that segment. The guidance cut signals that management expects these cost pressures to persist into Q4 and beyond, which makes earnings less predictable and increases risk. The broader healthcare managed care sector appears to be under pressure from similar trends: higher costs, regulatory, and market risk. So, MOH is getting hit partly with sector headwinds. What to watch? How fast and how much medical cost trends can be tamed, especially in marketplace and Medicare segments. Whether premium rate increases or regulatory changes can offset the rising costs. The next quarterly report and updated guidance. Investors will want signs that the trend is stabilizing. Competitive regulatory slash Medicaid slash marketplace enrollment dynamics, these affect cost and risk. How the market reacts. The stock price drop is steep, 17 to 20% plus in after hours trading, reflecting investor concern about profitability and risk going forward. Bottom line, the stock is down because despite revenue growth, earnings are collapsing, primarily due to margin pressure and weak forward guidance. The market is treating this as a red flag about profitability and risk going forward.
Okay, so the market for the stock currently is not that active. So it's surely the stuff of aggression that is behind this plunge. You may have done that. This plunge was actually yesterday, as a matter of fact. Yeah. So as things stand right now in this pre-market session, not very active. So we could let's see now. Let's see whether we can find 195.68. What is the probability of it retesting it? Okay, so let's pick up some values and see whether we can calculate the probability of it retesting that price. Let's add standard deviation to our list of indicators to get all the quantities we need. Let's have a look here. Point this to 10. Yeah, okay. So this is the price we are talking about, 196.9. Okay, let's try this. 195.37. Okay, let's see. That is okay. Let's say that's the price here. 194.65. Okay, 194.65. There's that's probability that it's gonna be high because we are looking at the prospect of what was it, 194.65. Moving average is 195.58. It's going to be high, very high probability. 195.58. Standard deviation is 1.83. So there's a good chance this probability is going to be more than 50%. Okay, so yeah, this is where moving average is. If the moving average is greater than your target, then there's a good chance we are going to be dealing with a probability that is greater than 50%. Let's see what we have. 194.65, 195.58, standard deviations 1.83. Yeah, you can see that the probability of it surpassing 194.65 is 69.4%. The probability of it remaining below 194 is 30.5. So it's quite a lot, well, quite balanced, even though it's not, they're not even. But yeah, that's what happens when you have probabilities that are greater than, sorry, standard deviation, sorry, moving averages that are greater than your target. So that's what we're dealing with here. So statistically, there's a good chance that a rebound could happen, even though the algos doesn't seem to be reading any meaning into that. Okay, just have a look and see what you make of MOH. Currently down. The loss is now 18%. So, okay, thank you very much for watching this video.